It was nice for ranges. As you know, I have two futures accounts and one prop evaluation account. And I happened to do really well today in the chop on the account that doesn't matter.
Always, always, always.
It's a tradition, nail care emoji.
Yeah, that's right. That's right.
But all right, just really quick. I guess it might have actually been easier for me to pull up the tweets on these trades. But the first one I'm going to just take, like I said, very quick look at a couple of trades I've been tracking. So this ticker COF, I've been kind of following this trade on the $136 call since the 13th. So about a week, not exactly a week. That's, 7 days. 7 days, today's 20th, today's 20th, 7 days, a whopping 7 days. So we're going to go back really quick to the order I saw that got me to save the trade itself. And boom, there it is. It's only showing one because it was a series of orders, and we have a rate limit of size and premium for it to show up in historical flow. I believe there's working on expanding that or ways that you can toggle that your own, but that's down the pipeline. Keep an eye on that nice change log button in the top right-hand corner of my screen here. That'll be very useful to see the updates because they happen all the damn time. So fast that me, who teaches the platform, just like the contingent trades that we're going to go over today, sometimes I don't even know we have shit. And then we just have it. So right here, this actually expires on Friday. So it had 10 days to expiration when it came through on the tape. And it raised my eyebrow for a few reasons. One, you can even see pretty clearly right here, 8/13, August 13th, 1200 volume. There's no open interest at all. So right out of the bat, in sizing that big, we already know that's a brand new position, right? You can't close contracts that don't exist. So if there's no open interest on a contract and you're seeing a pretty good amount of volume, you can deduce that that's a new trade. Now, if this open interest had been, 1,000, 2,000, 3,000, it could be a position closure. It could be a new trade. You won't know until the next day for sure when that open interest updates. But lo and behold, on the 14th, all of those contracts carried over. And these bad boys filled at 140 per contract within a bid-ask spread of 125 to 140. So that has me leaning toward, hey, these probably, most likely, bought to open, significantly closer to the ask in that it's directly on the ask. Not to be confused with is always bought. Just because it fills at the ask doesn't guarantee it was bought, but it's significantly more likely that it was bought. And I wanted to bring this trade up, too, because I think this trader kind of nailed it. If you look through the historical flow here, going all the way back to July, this contract didn't trade whatsoever. There's no transactions, 0-0 across the board. And, I mean, there were 10 contracts on the 7th, but pretty much until this massive series of orders on the 13th, this contract was dead. There's nothing going on this contract. And they kind of, sort of, caught the bottom in recent history on this contract. In the historical data, this is the lowest price that this contract has ever transacted at 140. They bottom ticked COF during that downtrend that it was experiencing. And I think COF's a bank, right?
Capital One, right?
There you go. And I mean, banks had a little bit of a heater last week in some cases, not all, but in some. I know there's a GSK trader I was following, and he popped off big time too. But this bad boy, instant profits the very next day. He bought it at the bottom tick of the contract's value at 140, and by the next day, he was already up almost 100%. 272 was the high of the 14th, already 100%. Homie did not close his position. Lo and behold, COF kept rising, as did the value of this contract. As of yesterday, I say yesterday and not today before close because no volume transacted today, so there's no direct value data for the contract today. There's the bid and the ask, but if no fills happen, it didn't transact. There was no trade. There was no profit to be had there unless he closed them, which he did not. But as of yesterday, these were actually up to $657 per contract. The only thing that I'm curious about is when these were opened, COF was trading at 132.86 per share. So about 2% out of the money there on the 136 call. Now, They're in the money. COF was trading above 141, I think, today, and yesterday it was even higher before that market-wide pullback that kind of jumped and then pulled back and then jumped and then pulled back. COF was still trading well in the money on this 136 contract. So what I'm going to be curious to see is one of two things. The first thing, I want to see if they take profit finally. I mean, that's 657 from 140 to 657. That is 369%.
Yeah.
369. I would have sold that shit so fast, especially since they expire in 3 days. These expire this Friday. Now, that's the one thing I'll be looking for. I'll be looking to see if we have a big volume spike toward or on the bid for 1,000+ contracts, either tomorrow or Friday. Homie took profit. The other thing I'll be looking for is for no volume to happen and these contracts to just expire without transacting again. What that would insinuate is that they exercise the calls for shares. If these contracts expire in the money and they don't transact to close the position, it might vary by broker, but I'm fairly certain brokers will automatically assign and automatically execute shares from expired contracts. If it expires out of the money, it doesn't matter. It expires worthless. It's nothing. They get nothing. But I wouldn't be surprised, especially when we're looking at a bank and not necessarily a financial institution that's tiny, regional, itty-bitty. It's Capital One. They're pretty big, right? I wouldn't be surprised if they exercise these and pull the shares. But we'll see. So I'll be tracking this one pretty much until Friday when it expires. I want to see what they do on COF. Now let me see if there was another trade that I thought was important enough. The Rocket Lab guy, I mean, I've talked about him a couple of times. They're still plugging along. This position's still open. I mean, we saw this open on the 15th, and they paid, what was it? Not a lot. They paid like $14.50. Here's 50, 25, 14, 13. They were buying these $8 calls for October on Rocket Labs well before that news dropped, and everything just kind of ripped to the upside like crazy. And within minutes, I think they were up 150%. And then within minutes of that, they were up 250%. And then by, I think, the very next day, 8/16. Yeah, by 8/16, they had gone almost 1,000%. Their initial entry was 14 per contract, and it was trading at 149 on the 16th. That's about 1,000%, over 900%. And they are still open. Once again, this is a situation where I probably personally would have taken profit. But I've been burned before. Dan's seen me countless times take profit at like 25% and then come back complaining like a complete noob about how, Dan, 550%, Dan, what's wrong with me? And then he just calls me a paper-handed bear and we move on with our day. But other than that, I mean, those are the two main trades I've been tracking this week at least. Y'all know me. I watch the market tide all day, every day. I'll ping Dan about that pretty regularly too, and he'll be like, "Shut up, dude." But yeah, I guess I'll be tweeting about that some more because I'm not somebody that's gonna see 369% on something without making a song reference and without taking profit. In this case, I would have done both, but I'm also not a big money bags that can execute 1,000 contracts of a $140 stock. I don't got that kind of capital. So I'm taking that profit. I appreciate that, Presvoxy. I don't even know how to say that, dude. I'm not even going to say the other guy's name. No, I'm gonna. It's Pedo POTUS, and that's pushing it, my guy. That's pushing it. You killed Dan. You'll fall over, drop out of the call. All right, another ad break. I'm going to skip that shit because we're going to probably... this will probably be a pretty short presentation comparatively, right? Like, it's not going to be another 2-hour banger like the debit spread.
Yeah.
Or did you go ham on it and it's going to be a 3-hour?
No. This is relatively short and sweet. But it's worth mentioning because the question, not only did the question come up, but I see some conversation about trades in the dark pool and what the tags mean. And so this is a good opportunity to answer that question, and then go over some tactics for identifying like the transactions that are potentially tied to or related to that contingent trade. And so hopefully this is educational, and you come back to this and see how to go seek out what trades probably were connected with one another as something executed in the dark pool, and as you see it on the Unusual Whale site.
Good deal. I think it'll be useful. I mean, like I said, someone should be very well versed in the platform. I didn't know that we tracked those contingent transactions. I knew they existed. I didn't know we tracked them. And so that's a fault on my part. But how about let's go ahead and, well, real quick, Felipe says, how effective is it for day trading Unusual Whales? If you mean like intraday, I use the market tide every single day I trade, and Dan can attest, I'm not exactly swinging my trades. I think my average hold time on a scalp is like, it's sub 3 minutes. Occasionally I'll let one ride, but I'm someone who cuts my losses really fast and also cuts my profit really fast, but on a larger scale, hopefully, usually on a larger scale than those losses are. Dan's got bigger balls than me in that regard. He'll hold through like a 50-point drawdown and just be like, it's a lifestyle. It's part of the process. And I'm just like, dude, I'd be shitting my pants.
Normal variance, man.
So I would say, yes, it is effective for day trading. It depends on what you're doing with your trading. It depends on what your goals with trading are, what style of trader you are. When it comes to options, I won't trade options without it personally, but most of my options plays are swings. So I'm not usually getting into a contract I see in the flow and then getting out same day. Usually I tend to wait after I see it to see if we get any pullback and stuff, see if I can get a better price. If not, I tend to get that contract at the end of the day and give myself some leeway in time, see how the chart looks. Usually my options flow trades are swings, but when I'm using the market tide trading futures, they're scalps, 2-minute stops, and I'm out of there. But I hope that answered your question. And without further ado, I think I'm going to go ahead and kick this over to your screen, Dan. And I'll let you kind of give this little contingent trade, and then if we got a little bit of time at the end, we'll go through some flow requests if we have time. No promises, but I will be back later this week on a solo for it if we don't get to it today.
Yeah, that sounds great, and I can discuss like the world's most hated sector flow trades that I saw go off. That might be interesting as well. We could review that in tandem, but. Contingent trades. So what is a contingent trade and how to research them? That's going to be our little education piece today. So let me go ahead and, okay, great. There is a formal definition of a contingent trade. It's not the easiest to grasp, and I don't expect anyone to read through this really quickly, and I won't just read off the screen to everyone because you're all very capable, and these slides are available sooner or later, right? So we don't need that. And in fact, you can hover over this inside the dark pool flow tool and actually see these definitions as well.
And his comment on capability is about you guys, not me. So keep that in mind.
Yeah, that's right. That's right. So to make a long, wordy definition relatively short and digestible, a contingent trade is a trade that depends on multiple instruments being executed at a certain price and within a certain amount of time, and they're like tied together, right? It's all one unit, but it's not executed at the exact same time, right? There's potential for this to occur like over a minute or a couple minutes, but it's different instruments, and the execution is dependent on all conditions being met for the trade to go off. And so what Unusual Whales is really good for is identifying this middle case here, where it is a stock transaction that is connected to an option transaction as well. And so the example I'd like to go through for a contingent trade is on stock TSLA Tesla, and this one went off yesterday, and you can see here in the screenshot the contingent trade and qualified contingent trade types both have a tag, so you can see whether or not this transaction was a contingent trade. So right away, you don't have to be some kind of Houdini and identify that this trade occurred and it was contingent on something else by vibes or guesses. You'll actually see it, the tag here inside the dark pool feed, and you can get to the dark pool feed from the stock data menu. So you go to stock data, dark pool feed, and what I did here to find this contingent trade, I typed in Tesla, the symbol for Tesla, TSLA, and I filtered out any dark pool transaction that was smaller than 10,000 shares. And so I scrolled down a little bit, and here we are, right? Contingent trade. This one went off at 1:14 and 51 seconds p.m. and that's Chicago time. I'm here in Chicago, so we're on Central. And so when you see a contingent trade like this, it's important for you to recognize the fact that this is tied to some other set of conditions, some other trade executed alongside this transaction. And so the easiest way, or rather not necessarily the easiest way, but the best way to research and try to find a connected transaction for a contingent trade is to first see this transaction go off in the dark pool, because that's where you're going to get this contingent tag. And then you're going to want to go to the overview for this particular symbol. So again, I'm going to go to the overview. You get there by using the ticker explorer menu, and you hit that ticker explorer and you go to overview, type in Tesla. And so what I'm looking at right here is the options volume chart. I have it set to 2 days instead of the default 1 day because the trade went off yesterday, right? So I need to look at yesterday, and you'll recall that this trade occurred at 1:14 and 51 seconds Chicago time. And so what I do is I hover over with my mouse right here, and you can see it inside the screenshot. You can find that little 5-minute section of time. And at that 5-minute section of time, if you click the bar there at the bottom of the chart, that green and red bar, it'll bring you to the flow view for Tesla options at that time. So what I did here was click on this. I clicked on this bar. Tesla is a pretty liquid and highly traded option name. So there were lots of trades going off in here, but I knew that we were looking at more than 10,000 shares. And so I thought, I really don't want to be looking at smaller transactions. So I set my size filter, which you can see is highlighted in yellow on the left side of the screen. I set that to 100, just to say, I'm really only interested in looking at transactions that were more than that were at least 100 contracts. And fortunately for us, that 5-minute slice of time did not have that many large option trades. And what I noticed, what kind of jumped out at me real quick was this multi-leg trade right here that's highlighted in yellow. It occurred at 1:14 and 5 seconds, so it was within 1 minute of that dark pool contingent trade. And so what I want to do with this particular transaction is I want to click on that those up and down arrows to get a look at what this trade was. So I click on those arrows, and that brings me to the possibly related multi-leg trade screen. And what you can see is that this trade happens to be a ratio call calendar. We don't have to go into all the idiosyncratic stuff about call calendar trades and the way that those work, um, and what this trader might be trying to do. What is what I think needs to be focused on here is our little column that says share equivalent. So if you look at the structure of this ratio calendar, you can see that the desk that executed this sold 105 Tesla 240 calls for the August 30th expiration, and they bought 300 calls at the 240 strike for the November monthly expiration. And so you can see that we have this cool share equivalent column, and the share equivalent column gives you an idea of what, if you were to take the delta associated with those options, and you were to convert it into their share equivalents, that's what the value would be right there. And since the 240 call for the end of August was executed at the bid, and the 240 call for the November monthly expiration was executed at the ask, it's reasonable to assume that the front month contract was being sold and the back month contract was being bought. So if we wanted to calculate what the net share equivalent was for this trade, we could simply subtract the 240 call that's expiring here in about 10 days. We could subtract the share equivalent of that transaction from the share equivalent of the long transaction. And if you do that math, you come out to 10,364 shares. And you'll recall that our contingent trade was for 10,650 shares. And so, much like anything, unless you know the person, the desk that executed this trade, you can't ever be absolutely sure that this trade was related and that these two were connected. But it'd be very reasonable to assume that they were connected because the share equivalent of both of them is so similar. And so what you wind up with is a ratio call calendar that's like net positive about 10,500 shares, let's say, and you have a contingent trade, a dark pool trade that occurred. And remember, we don't know whether dark pool trades are bought or sold. All we know is that a transaction occurred there at a price, and that transaction was also for roughly 10,500 shares. So if if there was a reason that I had to make a best guess kind of approximation for what happened, my assumption would be that the desk, the institution that put this trade on, wants to have the call calendar ratio on, but they want to have this trade on in a delta neutral fashion. So they're getting a bunch of positive deltas by taking this ratio call calendar and putting it on their books, right? So they get like 10,500 positive deltas once the whole structure has been executed, like it was right there. And then as part of their contingent order, they wanted their executing broker, Interactive Brokers or whatever, they wanted to sell approximately 10,500 negative deltas, right? So essentially, the result of this trade is likely a delta neutral position. So it doesn't matter to this desk whether or not the price of Tesla goes up or goes down. What they wound up with is a Vega and implied volatility position. They're long Vega in Tesla, and so this position, if it were to be held delta neutral, would make money if implied volatility increased in Tesla if like call side implied volatility increased as we went into the late as we approached the back expiration there. And so the key takeaways here for contingent trades is, first of all, when you see a dark pool transaction that has the contingent tag on it, you immediately want to be suspicious, right? Or you at least want to acknowledge that this trade required some conditions to be true, and it's likely that part of those conditions being true involve trading some other instrument that's associated with this stock. Now, using unusual whales, you can probably find, if it was related to options, you can probably find the related structure. Probably, there's no guarantees. There could be other derivatives associated with a contingent trade like this. But if you execute a little detective work and a little patience, and you take advantage of the unusual whales share equivalent calculation that's available in any in any view, right? It's part of the table. You can add it to your flow views. Then you can use that information to make a well-educated guess about what the total trade looked like, rather than just looking at a stock transaction or an option transaction in isolation. Because again, you can have very high confidence that this contingent trade was not simply a single buy or sell order for stock that happened to execute in the dark pool. And so that's everything that I have prepared for contingent trades. I'm happy to take any questions if there happen to be any questions, but I imagine everybody just got a lecture on contingent trades and stuff they probably didn't think about. So, I'll hang tight for a second, and then we'll, maybe we go on to something else, different flow trades, or maybe we take questions. I don't know. I mean, you tell me what you want to do next, Nicholas. What do you think?
We'll do a little bit of both. Why not? I'm going to give them a few minutes to catch up with the YouTube delay about you asking for questions. But obviously, if any questions come up after the fact, or even if we move on, if you have a question, we have no problem going back. So if anything comes up, feel free to ask. Was there anything that you were watching at all today, Dan? I know your flow surfing is a bit more... I guess a bit less stupid than mine would be better than saying a bit more big brain. I look for naked transactions, man. I'm not good at spreads. That's what we got Dan for.
No, and I'm looking for the same thing too, right? Seeing some desk execute a long Vega trade in Tesla at that size is not. It's interesting to me because it's some cool math, right? But I mean, who cares, right? Like that's not something I can replicate. I certainly don't have the volatility modeling that institutions have, right? There's just not a lot of there's just not a lot that I can do with that besides be aware of it and not and instead of like just jumping in and doing something because my assumption or because I saw that contingent trade, like taking a beat and thinking a little bit and going out to search what might be out there rather than just attempting to long or short based on that. Yeah. And so there was actually very some interesting transactions that went off yesterday with like the world's most hated industry, which is airlines, right? There's like running jokes that nobody makes money in airlines, right? It's like over the lifetime of airlines, all they've done is lose investor money. But there were a couple
on shorting airlines.
Well, yeah, that actually I was going to say that kind of makes sense. But I noticed a couple trades went off in UAL, which is
Ooh.
United Airlines, yesterday. And the reason they jumped out at me is because, well, the reason I was looking in the first place is because I saw some in the money put selling, and or what I suspect to be in the money put selling. And in the money put selling is very interesting to me because it it definitely speaks to like confidence on the side of the of the trader who's putting that risk on, because compared to, we know puts are calls, calls are puts, there's put call parity, right? We know that an in the money put for the meat of the delta move is exactly the same as an out of the money call, as far as option characteristics are concerned. But if you're on the wrong end of that, a long call buyer doesn't have to doesn't have any like assignment repercussions there, but a put seller is, a put seller has a little bit more on the line, right? That put seller can be assigned those shares, because if you're wrong on your directional assumption for selling puts, especially in the money, um, the the downside of that can be like a lot worse. It can be worse than just losing the premium outlay you use to buy those out of the money calls.
We actually just watched that happen to that EXC guy. But he wasn't shorting in the money, I guess, to be fair. No, I lied. He was shorting in the money. They went technically out of the money, and he got assigned. Bye bye
Interesting.
shares.
Yeah. Well, there you go. What jumped out at me was this. So this is the 43 strike put for the October expiry in United, and this went off yesterday. And I have pretty good confidence, right, that this like open interest carried over, right? There are 658 carried over from the 700 transaction that occurred. And when I clicked in here and looked at it, it was a repeat hit type of trade, rather than all going off in one shot. And the very first ones were transacting right on the bid, which was 5 cents wide. And so, like we've said before, there's never any guarantee, but we can observe what's happening with this contract, and we can say, okay, great. The initial trades went off on the bid, and we can also see that as time went by and this contract was getting kind of slammed here, the implied volatility was dropping down, right? So as this trader was hypothetically hitting the bid, the implied volatility on this contract was decreasing as well. So not only were the trades going off on the bid price, but we noticed a small implied volatility drop between two of the transactions, which again leads us to suspect that this was some put selling for United Airlines. So this desk was this, or maybe this wealthy individual, right? Whoever it is, um, this customer was selling the 43 put when United was trading at like 42 something, 42 and change. And um, so I was already looking at United, because I do see put selling as like a very high confidence trade, not only for the reasons I mentioned, because it is there's like a lot of risk if that trade goes against you, but also there's something to be said for in the money put selling being like kind of sneaky. Like there are people watching option flow. It's like, it's something that can be monitored, and as such, desks know, institutions know that if they slap on a lot of risk in out of the money calls or out of the money puts, it's definitely something that people are looking for, right? It's like it's something that's going to hit filters across the world. Whereas in the money put buying, they can get that delta risk on, they can get that trade on probably in smaller size than buying out of the money calls, right? They don't need to trade as many contracts, which is good because everybody pays transaction costs, and those have an infinitely negative Sharp, as a really smart guy once said. And so nobody wants to pay transaction costs, so you can avoid them if you can get the same risk on with in like a smaller size package. But also, your in the money puts at smaller size are a little bit less likely to turn up on everybody's flow filter, right? So you might be able to get away with some sneaky with some sneaky trades kind of getting underneath the radar. So I definitely like to look for sold puts. And what further made this interesting was not but a few minutes later, right? The December 46 call in United saw lots of offer lifting here, right? So we saw 3 different trades go off, kind of dispersed throughout the day, but they were all roughly equivalent, like all roughly the same size equivalent, like all were around 500 lots. Each one went off as a screen trade, right? I definitely love seeing screen trades rather than necessarily seeing it all go through like a floor broker. Again, because a screen trade is pretty urgent, right? If someone with size is putting trades through and they're getting tagged as sweep, or they're getting they're going off on the screen, they're not getting negotiated through a floor trader or through a floor broker, that means there's some urgency to that transaction, right? Like no one took the time to call up their broker at Morgan Stanley or Goldman or wherever to try and negotiate, to try and get a quote, right? They just hit the bid, or they lift the offer, and away you go, right? They're executing that on screen. And so the fact that we saw in the money put selling for October and out of the money call buying for December tells me that, hey, there's some interest. There is some size getting put on in United for the end of the year in the bullish direction. And so what I was just looking at today was trying to come up with some interesting ways to express that using like calendars or diagonals, because the two are staggered out. And I haven't come up with like a really interesting and exciting structure, right? Nothing has come together and has really made me be like, oh yeah, nice, I'm gonna do something with this. But it is something that I want to pay attention to, and I want to be aware of, because the airlines are hated, and I think they're hated probably with like a very good with good reason, right? With good reason. So knowing that these trades are going off, I think it's something that's worth watching, and just being aware that there's some folks are wearing some risk on this into the end of the year, and it might make for an interesting long idea.
Butte. We did get there toward the end of your explanation. We got one question about the contingent orders. I figured no big deal to swing back. The question was, I may have missed this part, but I'm assuming contingent orders all execute at the same time with no delay. Does everything trigger all at once on a contingent order, or can there be delay between the different edges or legs or parts of that order?
There can be a delay, especially depending on how the how the executing broker decides, or gets that trade put together, right? So if you remember when we were looking at our dark pool transactions, um, the dark pool transactions went off like, I think it was like 45 or maybe 50 seconds later than the option trade did. Now, as far as the actual execution, the option structure might have gone on, and the dark pool transactions um, might have been routed like might have been routed right away, and that short, less than 1 minute of delay could have been just could have been the time it took for the requisite liquidity to be offered up by whoever's dark pool went off, or by whoever owned the dark pool where that trade um, was executed. And so there's definitely a possibility for that, for there to be a delay between the two. And the where I think this is particularly useful here is in the technical definition of a qualified contingent trade. So the the qualified contingent trade is looking for like all the components of the trade need to be executed near the same time, right? Not at, it's very specific. If it said they executed at exactly the same time, I would say, yeah, okay, right, this was not related. But the technical definition says they're near the same time, and then the the executed price is determined by that relationship, right? Because there might be a modest delay between all the different legs executing at once. Because if they all executed at one time, uh, I believe that there would definitely, it would be easier. Let's just say it'd be easier to tie these legs together, and more easily explain to users of the Unusual Wheel software, hey, these are related, right? There was a stock transaction associated with this option transaction. But unfortunately, this contingent trade, this qualified contingent trade type, very explicitly tells us that there may be a time delay in between the two legs in this case going off. So good question. Yeah. And that's what makes these kind of tricky. You got to put your detective hat on and look kind of closely with a contingent trade that's coming from the dark pool and potentially related option transaction.
One other question that came up, and actually, Dan, you know me when it comes to dark pool. This is a question I have myself as well. My understanding is that dark pool transactions are those that occur, quote unquote, off exchange. They're not on. They're off exchange, literally by definition. So my question is, and maybe this gets nitty gritty, overly complicated. Big brain dev needs to step in and have an answer for this. But how are contingent trades tracked if one's occurring in the options market and the other's occurring off exchange, and the timing can lag one way or the other?
Yeah. So my take on this is that the contingent, like the contingent trade is probably occurring with when it happens in a dark pool, when we have that tag for the dark pool, my view on this is that it is probably the owner of the dark pool that is the counterparty um, on like both legs of that transaction. So
Okay.
Goldman Sachs is the counterparty. They have a dark pool where they are, where they're providing off exchange liquidity, and they are a counterparty with, one of their prime clients is a multi-strat hedge fund, and that multi-strat hedge fund has a volatility desk, and they want to take that trade, and Goldman will make them a market for that.
Makes sense. Limit said again, individual brokers, hell of a question. Private broker question mark? I mean,
like a prime broker. So when you're an institution, you're a large institution, and you kind of like graduate past doing business with interactive brokers. You will maybe you graduate up to Goldman Sachs or Morgan Stanley, or some other prime broker, and they are going to they're gonna work with you on executing your trades, and you're essentially, as you get bigger, your transaction costs become more and more of a problem because you're trading so much size, right? As if you're trading thousands and thousands of option contracts a day, you can't be paying $1 in commission on each round trip, right? It's like that can become really painful, especially when your edge is measured in like cents. If you're a volatility desk and it's all Vega P&L, you like having $1, $1.25 or whatever, like round trip fees on that can be a real problem if your expected value on a trade is measured in pennies, right? You need your transaction cost to be like 5 cents a contract or 10 cents a contract, something like that. It's got to be a lot. It's got to be a lot more. A lot. You got to be doing a lot more volume, and because you're doing volume like that, you can work with a larger prime brokerage, and enjoy the benefits associated with a prime brokerage relationship. They give you research, you do your trades through them. They collect that like commission on all those, but the commission is low. But you do enough size that it's worth it to your prime broker.
so that begets kind of a follow-up question from me. Would it be too much of a stretch to say, like, in the event that the counterparty is the same for both of those legs of the contingent trade, would it be out of pocket to say that contingent trades, though the options contracts are happening more or less normally in terms of transaction tracking on the market, that the build or how the trades transact between counterparty and quote unquote investor, quote unquote trader, functions somewhat in the way that cross trades do, where there's like essentially an agreement between the two parties. It's not a matching thing happening through the broker. We know we don't, but the two parties know who their counterparty is and what they're getting out of the trade. Would that be within the realm of similarities?
Like, I would assume so, right? I would assume that's a possibility. I can't say for sure. I don't work at an exchange. I don't
Fair.
work at a prime brokerage, or on a trading desk. But I'm sure there's some more information to be had if you want to really really dig in and read up on like exchange documents, and and you want to try and challenge yourself to not fall asleep by reading through all the different order types and order requirement stuff. Yeah.
For those wondering what I'm talking about that with cross trades, I'm actually going to drop a link in chat. Uh, our good old Snorlax on the UW team posted an amazing iteration of how cross trades work, but it's a dramatization from a TV show. So I'm not going to play it because I'm not trying to get DMCA'd before we even get the channel up and running. I'll take risks like that later on for 30-second clips, but not today. Today I just dropped the link in chat. So go ahead and check that out. You'll see what I mean with my question there about how cross trades function. We're coming up on our hour, Dan. Do you have anything you wanted to tickle at all, or any clarifications from last week? I doubt it. I mean, you hit pretty much every nail on the head last week.
No, nothing for me to add at this time, but like just an open invitation and offer for questions, whatever it is. Like, whatever it is that we can help out with, whatever it is that I can dig into and research, don't hesitate. Ask away, fire away.
Absolutely. And both of our handles for Twitter, at least, will be in the description of this live video. They should be already, I think. And if you missed the whole presentation on contingent trades, I'll probably, what's tomorrow, Wednesday? Got a newsletter in the morning. I'll get that out. I'll probably have the standalone video for that as well tomorrow afternoon sometime. Just post it on here clean. That way you didn't miss anything. I know we have mid-roll ads going on. You won't miss anything from those. Everything's going to be on here permanently all the time. So you don't have to worry about coming in late or anything like that. And, of course, any questions that come up, just drop us a comment, tag us on Twitter. We'll be happy to answer how we can. And, Dan, I'm going to be honest. You know me. I like Power Hour more than I like evenings. But we had more concurrent viewers in this time slot than both of our other Power Hour time slots. So I think we can roll with this for a few weeks. If y'all who are hanging out with us and stayed through all of that liked this time slot, I think 5 p.m. Central, it shouldn't be too bad. Joshua asks, is there a playlist where I can have these? Yes, we have a metric. I almost said words you can't say on YouTube. We have a shitload. We have a shitload of, let me get the right screen on here, of playlists. I'm just going to head over to the YouTube channel on my screen here. Y'all can see it. In the Unusual Whales channel, all of our lives, so anytime we stream, they're going to be smack dab in this live tab, and they're going to be there permanently. They're not going anywhere. They're going to be there. You can see my goofy face. You can see Dan laughing at me for being goofy. The whole shebang in the live stream. In addition to that, we have several playlists. The educational ones, so like the call debit spread streams we did that I edited and cleaned up, and then this one tomorrow afternoon with the contingent trades, those are going to go in this much, no, don't play the playlist. Show me the whole playlist. Oh my goodness, YouTube. Bullying me. Much more stuff in here. This education playlist goes through everything from what we went over on the lives here to navigational walkthroughs of the website to understanding the tools like the profit calculator, the market tide. Everything's going to be in there, and there's a lot more on the horizon. So we're trying to keep a lot more video content for you guys because I'm like everyone else. I don't want to read through 50 pages of FAQ. We're going to try to answer those questions in FAQ videos, so to speak. So this education playlist, I'll drop the link again in the chat, but you can find it pretty easily just by clicking on the channel as well. Going to be invaluable with using the platform. And every time our platform updates with new tools, I'm going to be slapping a video on here for that new tool too. So just check in. William Blanket says, awesome stream. I'm in the Discord. Never knew you went, guys. Jeez, I can't even talk anymore, Dan. It's late. Never knew you guys went live. Looking forward to attending more. Yes, sir. Every Tuesday, now at 6 p.m. Eastern, I suppose, for the time being.
Yeah.
We'll be doing them more often.
This is good.
Yeah, this was a good one. We had some flow. We had some Dan brain, and then we had some more flow. It was a good stream. Thanks for kicking it with us, guys. Think we are good to hop off. Enjoy the rest of your evenings, everybody, and we'll see you again Tuesday if I don't personally see you sooner on Thursday for some flow reads. Take care, everybody.
Bye, all.